It's a day of bloodbath on the day street. The benchmark index Sensex has tanked over 1,000 points in trade today. The Nifty began trading 400 points lower below the 21,650 mark. Even now, it is trading near 330 points lower in trade. But what is behind this sharp fall in the markets? And is it getting serious now? Should you be worried about perhaps a bearish scenario emerging after the stunning rally in the markets that we have witnessed? Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra. On this video, I'm going to be telling you 5 top reasons behind the bloodbath that you're witnessing on the D Street today. Remember, the market capitalization of all the listed stocks on BSE declined by nearly 2 lakh crore rupees in trade today, falling up to 373 lakh crore rupees as of today. Now, the top reason why the markets crashed in today's trade was one stock, HDFC Bank, with the share price of HDFC Bank cracking more than 6% in trade after reporting of its December quarterly earnings. This also led to a sharp fall in the Nifty Bank that dropped 2.5% in trade today. Remember, it is HDFC Bank that contributes almost 14%, has that 14% weightage on the Nifty index as well. And therefore, it's the highest weighted stock on the Nifty Bank, and among the banking stocks, it has the highest weightage as far as the Nifty index is also concerned. Of course, we did see a reaction of HDFC Bank, the ADR shares, the shares listed in the US stock exchange, falling 7% after the reporting of its earnings. That already had given us an idea that today will be a day when HDFC Bank could be the bigger culprit when it comes to the market fall. Top brokerage houses like CLSA and Morgan Stanley have red flagged loan growth and lower liquidity coverage ratio, or the LCR ratio, on HDFC Bank. The falling NIMs is also another concern, and of course the rising provisions against bad assets in the alternate fund as well has been highlighted as the other key reason behind which we've actually seen HDFC Bank results disappointing the street. Although when we talk about the year-on-year numbers, they have actually seen a bump up. But of course, this is the result of the merged entity of HDFC and HDFC Bank that you're seeing, and therefore it's not comparable on a year-on-year basis. The second reason behind the market fall today is the weak global market cues. We've actually seen both the US markets and the Asian markets slipping in trade. US markets overnight, Asian markets in the morning trade, trading in the red, a sharp fall across the globe. US stock indices ended lower as the bond yields were seen rising, and after a stunning rally that we have already seen in the markets as well, now we've also seen the Asian markets declining in trade as well. And of course, this is ahead of the key economic data that may come out from China as well. US markets were also falling on one more account. One is that the US federal governor, we've heard some statements of hawkish stance as far as the rate cuts are concerned. Remember, we were talking about how the rate hike cycle is perhaps near its peak, and in fact from March onwards, there were initial indications that the rate cuts will start happening. Markets were already penciling in an earlier rate cut, but hawkish statements coming in from US Fed have again given this feeling of the market, this feeling to the markets that perhaps the rate cuts may not be coming in as soon. The third key reason for the market fall today is the dollar index, which is at a 1-month high. The dollar index, whenever it rises, the crude oil and other commodities become more expensive for countries which do not have dollar as their currency. Case in point, India, because we will need to import in dollar, and dollar rising will increase expenses for us. It increases the import costs and widens our current account deficit. That's the third reason because of which the markets are falling. It's hovering near 1-month high, the dollar index, against a basket of currencies, and that's one of the key reasons as well. The fourth key reason is the overvaluation concerns. The mid and the small cap space have run up so sharply in a short time that now the spaces look overheated. The mid and the small cap space is overvalued, sustaining at these levels right now only because of high liquidity in the system. That's what experts say. Remember, the Nifty small cap index surged nearly 60% on all across 2023 until so far. The mid cap index has gained over 40% in the last 1 year. At the same time, Nifty is just surged about 21%. So there's a huge gap. So the pockets are more vulnerable to profit booking at these higher levels. The fifth key reason that I'm going to list out behind the sharp fall today is the rising tensions in the Middle East. Remember, Iran has now hit a jihadist group in Pakistan with a missile and a drone strike, as per the Iranian state media. A series of conflicts continue to spread across Middle East in the wake of Israel's war in Gaza as well. These are the 5 key reasons on the back of which markets have been losing ground. Even now, if you see, there's a 360-point cut on the Nifty. It slipped below the 21,800, then 21,700 mark, and it's now hovering at 21,670, down about 0.16% in trade, 1.6% in trade for both the benchmarks, the Sensex and the Nifty, with nearly 1,100 points of a slash coming in on the Sensex as well. The big question now is this the beginning of a long-term correction, or will these dips also end up getting bought? That's the big question that we're asking all our experts throughout this day. So stay tuned onto Business Today Television to find out whether this is one opportunity that you should be looking at investing into the markets. Long-term investors, if you are, start allocating higher sips in these kind of cuts that you're looking at into the markets, because the long-term story of India is still intact as per most of the experts. Stay tuned to Business Today TV as we get you such interesting videos continuously.
Hello and welcome.